Hi everybody, this is week 12, lecture 2. Okay, this is supposed to be topic 10. This is a typo error. Supposed to be topic 10. This is the final topic, the last topic in ACT4131. The title of this topic is Reward and Compensation Plans. This topic is very good. It is the final topic for you, and it is about rewards and compensation. Rewards means, the simple definition for rewards and compensation is payments made by businesses to workers and to managers. This is good knowledge because in the future you will work in companies and organizations, so you have to have some knowledge about how they design the rewards or compensation for managers and workers. Okay, one of the main important thing that is related for this topic is you have to understand the basic idea. A business or a company design the reward and compensation system in order or with a purpose of to control the managers and workers. Companies are owned by shareholders, so shareholders invested their capital, their cash, etc., assets in the business, and managers and workers are people hired by the shareholders. So how shareholders can make sure the managers and workers work for them? They have invested cash, etc., in the business, so they want people who works in the business to work for them, to works for the benefit of them, to works to maximize the profit of the business. So they use the compensation and reward system to control the behavior of managers and workers. You will see that point later in this topic. Okay, see here there are some things like introduction to this incentive system to reward performance, linking rewards to performance. So basically, like I said earlier, the owner of the business, the shareholders, wants the manager and workers to make sure the business performing well. That's what they want. When the business performing well, the business can generate profit, the shareholders will get return from their investment. So there's a link between the rewards or compensation and the performance of the business. So see here, rewards is used to attract and retain talented employees. So that is another reason, another thing that you have to know about rewards. It is also designed to retain and attract talented or good employees. See, performance, measurement of results or outcomes, organizational goals and objectives, so it affects the reward system. Okay, there are two types of rewards. If a person works in a business or in an organization, the person will get two types of rewards. The first one is called intrinsic rewards. Intrinsic rewards come from within an individual and arises from satisfaction from a job well done or from doing things that are consistent with one's beliefs or values. According to cognitive evaluation theory, the innate psychological needs for competence and self-determination are the basic determinants of intrinsic motivation. Interesting and challenging tasks provide high intrinsic rewards. So intrinsic rewards is something inside the person who works in an organization or in a business. That is mainly about satisfaction. If a person works in an organization and he feel satisfied with the job environment, with his job, then it can be said that that person got the intrinsic rewards. Okay, so another type or category of rewards is called extrinsic rewards. Extrinsic rewards are rewards received from others. Intrinsic rewards are within the workers, within the person who works in a business or organization. But extrinsic rewards are rewards received from others, from the employers, such as cash bonuses, prizes, awards, and course grades for job well performed. That is, the wages compensate minimum acceptable efforts. Rewards are used to motivate additional efforts. McGraw 1978 concludes that extrinsic rewards will facilitate tasks that are boring or monotonous and require straightforward and mechanical solution procedure, but could be detrimental to tasks that are interesting or challenging. So when you see something like this, McGraw 1978, so this is actually referring to somebody who have written about this factor or concept. So it is referring to maybe a textbook or journal, academic journal article, or other academic sources. So from when you see here, it is good for you because you are final year student. I think you have to start to learn about how to refer to academic article or books or other resources. When you want to refer to these sources of knowledge, you have to quote the name of the author who said this. This is the example. But remember about the extrinsic rewards. Rewards received from others or given by the employers. In most compensation system designs, the type of incentives considered are generally extrinsic in nature, where people are adequately compensated financially, designing jobs and establishing an environment and culture that lead employees to derive intrinsic rewards just by working become a challenging task for management. Providing recognition, awards, or medal is a way to satisfy the ego of employees, and hence the rewards may be intrinsic in nature. So this is like a business or an organization only most of the time can provide extrinsic rewards. The intrinsic rewards, like I said earlier, is within the workers, within the person. So the thing that can be done is, if the extrinsic reward is good, hopefully the person who works in an organization will feel that he or she got the intrinsic rewards. Okay, this is about the performance-based rewards. Performance-based rewards are awarded on achieving or exceeding some measured performance. There are 2 points here. Absolute performance, for example, quantity produced, profit achieved, share price performance, or relative performance, for example, favorable variance, EVA, above average performance. EVA stands for economic value added. There is a subtopic about economic value added, I think. So this is like something used in management to measure performance. Okay, the second point in this slide is organizations' information system provide relevant and reliable performance information or indicators. So to assess performance, you have to have good data. So information system can provide that data or indicator. Effective performance measurement and rewards and compensation system. So this is the thing. A business or an organization has to have performance measurement and reward system. Has to have the system, and most importantly, to have an effective system for that. So let's see what you can learn from here. Appropriately chosen job or operations related performance measures to signal which aspects of the job is or are important. A mixed measures made necessary. So like I said earlier, the main point about this topic is there is a system for performance measurement and rewards for a worker or workers or managers, and then this system has to be used for the benefit of the business to make sure the business performing well. So the thing that you have to aware is how to design this system so that workers are working hard to achieve the goal of the business. So that is the thing. Employee must be able to see the relationship between effort, performance and reward. That is, system is fair and predictable or transparent. When a business wants to design the rewards and performance system, the business or organization must make it clear to the employees there is a relationship between the employees' effort and performance and the rewards, and the system must be fair and transparent, so workers are happy. They see, oh, if I work hard, I will get this. If I work hard, the business will get more profit, more successful, high performance business, and I will get these rewards. That must be clear. If the system does not clear, then the workers are uncertain. They do not know whether what they're supposed to do. So that is the point here. Standard set must be acceptable, and measurement system must be reliable. When a company or a business sets standard that the workers have to achieve, the standard must be acceptable, and also must be something that the workers can control. But if the standard is very high, then the workers will become demotivated. And also, if the standard is something that the workers cannot control, then the workers it's not fair for the workers. When you evaluate somebody, you have to look at something that the person can control. If you evaluate somebody based on something that he or she cannot control, then it is not fair for that person. The performance measures lead to behavioral changes beneficial to attainment of organizational objective. Okay. See here several more points. Must understand the organization's goal and strategies and how individuals in the organization must act or behave to attain those goals. Performance measures must be transparent and within the control of the individual employee. Rewards must be equitable to all levels of employees. rewards must be given on a timely basis to reinforce behavior. So one of the thing about the compensation system or reward system, it must be fair. If the system is fair, then the workers are happy. They will try to achieve the goal of the business. If the rewards is not fair, then the workers will become unhappy or demotivated. And also, when the business or organization promise to reward workers, they have to give the rewards or to pay the rewards on timely basis. Otherwise, the workers do not trust the organization, and then the system will become not good, because the workers are not happy, are not willing to do things required according to the system. Okay, next thing is accounting system collects the data, analyze and report the measures for determination of rewards due. So that is where accounting is relevant. When a business design a reward system, that is a management thing, reward system, but accounting has something to do with the system, the reward system. One of the thing is accounting collect the data, analyze and report the measures for determination of the rewards due. Accounting data is used. The simple example is the profit. Most of the time, managers, they will be rewarded based on profit. This is a very general sentence. It is not specific. So generally, or in a simple way, we can say that managers will be rewarded, will be given bonus according to the amount of profit made by a business. The higher the profit, the more bonus the managers will get. So profit is an accounting number. Is the product of accounting, the output of accounting. So that is how the accounting is relevant. Another thing is when a business assess the managers, the assessment also most of the time is done using accounting numbers. Okay, so incentive compensation systems work best in organizations in which employees have the skill and authority to react to environmental conditions and accordingly make the appropriate decisions. Where employees merely follow rules and procedures, the system are enforcement systems. Okay, so types of incentive compensation plans. Okay, plans is like package, type of incentive compensation package. Okay, let's see. Types of rewards or incentives and compensation system. Basis of award. First, based on business unit or department's attainment of financial target. Possible to cause goal incongruence. Okay. The reward system can be designed using a business unit attainment of financial target. The higher if the manager or workers can achieve better than the target, then the workers or managers will be given more rewards. So if a business use this first type of basis, then the possibility is it can cause goal incongruence. Why it can cause goal incongruence? Because the business unit or department will think about their department only, will not think about the benefit of the for the whole of the business. In a business, there are many departments and units or segments. So if this one is used as a basis of award, then it can make managers or workers think about their department only. They do not think about the business as a whole. Second point, based on corporate current or average over 4 to 5 years financial results or performance. Okay, this one is better. Lead to better team spirit and long-term view of performance. And number 3, based on both financial and non-financial. Non-financial means operational measures such as productivity. Productivity is the typical example. Performance measures. Bonuses can be in cash or in stock options and paid immediately if or deferred or over 3 to 5 years. Now, businesses are very creative. They design many ways of compensating their workers and managers. The typical one is to pay the rewards or bonuses using cash or using stock or using stock options. Sometimes they pay the rewards immediately, sometimes they defer, they delay. If a business delay the rewards, most of the time it is because the business wants to retain the employee. So the business said, okay, we will pay you your rewards in next 2 years. This year performance will be paid next 2 years. So the manager or the workers will have to stay because they want to wait. In the next 2 years they will get the rewards. I don't think that is a very nice thing to do to workers. Most workers, they want the rewards immediately. But when I check, there are companies that do that. They want to retain or keep the employees or managers, so they defer the payment of the reward. Okay, let's see point number 3, individual or group performance for awarding incentives. So a business or an organization should pay or refer to individual performance or group performance for giving incentives. So let's say group-based reward encourage teamwork and cooperation, but may encourage free riding on efforts of others. So if for a business or an organization, sometimes some businesses, they pay rewards based on individual performance. So if this manager good, he will be rewarded more. Second manager in second segment is not very good, he will get less. Manager in group 3 is average, so he will got average rewards, something like that. So that is individual performance for awarding incentive. Other companies, they use group performance. So every year, the average performance of all these 3 managers will be used as the indicator of the rewards or measure of the rewards. If in average these 3 managers are good, they will be rewarded more. If in average these 3 managers are not good, maybe no rewards, no additional rewards or compensation, no bonuses. So some businesses, they do that. If the point 2 and tick number 1, if the group-based rewards is used, This kind of way encourage teamwork and cooperation. So these three managers will work together because they know they will be rewarded in average, according to the average performance of everybody. So they work together to perform well. Everybody try to perform well and helps each other. That is good. But one weakness of this approach or practice is it may encourage free riding on efforts of others. Maybe some managers, they just keep quiet. They do not do much, but they are free riding. They like just want do not contribute much, but when everything is good, they will be rewarded also. That is the one of the weakness. Combination of group and individual based reward system, maybe that is the good option. A combination of group and individual based reward system. So maybe that approach or practice is better compared to group based only or individual based only. Point number 3, rewards or incentive can be paid immediately or deferred. Cash or equity, monetary or non-monetary. Fringe benefits or awards. Fringe benefits are like things like company's car, maybe company's house. What else? There are many things. Club membership, etc. That is non-monetary benefits or awards rewarded to employees. For a CEO, I think a CEO will get monetary rewards like salary, bonuses, stocks, and also they will get non-monetary rewards. Car, maybe house, maybe they can use company private jets, so they will get a lot because they work very hard and they work and they make profit million of dollars or maybe billion of dollars to their employer. So they deserve the reward. Okay, types of monetary compensation plan. So this is only focusing on monetary compensation plan. Compensation that can in term of cash, in term of dollar and cent. Okay, monetary compensation plan can be in the form of cash or stock bonus or profit sharing. For example, percentage of profit for bonus. See point number 1, one-off payment based on individual or group performance. Second point, may have no clear link between individual efforts and organizations' financial performance. There will be a problem with free riders. Stock bonuses. A stock bonus imposes a need for cash to pay taxes and possible risk-averse behavior. If a business give stock as a reward to the business manager, then the manager has the stock or share in the business. This can lead to the manager will become risk averse. They have the stock, so they know that if they do something wrong, then the stock price will decrease. So they can become risk averse. They don't want to take risks, even though they can see the potential profit from taking the risk is very high, but they think about their shares or their stock. If they do something wrong, then the stock price will decrease. So they become risk averse. That is one weakness of giving stock as rewards to managers and workers. Point number 4, considering EVA measure for determination of bonus payments. Economic value added. There is a calculation for that. If you check the textbook, you can see there is a calculation for that. If I need to, I will explain about that. Gain sharing distributes cash bonuses based on gains or savings arising from performing better than the target, and such system promotes employee participation, teamwork, and innovation. Sometimes a business, they evaluate the performance of the manager by comparing the performance of other managers in the same industry. So if the manager perform better than average of the industry, then the manager is good, and it can be done like something like that. And they have other ways also to measure the performance of the manager. Types of monetary compensation plan. Stock option. A manager or worker can be rewarded by giving stock or stock option. Stock option is like an instrument that given the holder of the option to purchase shares at certain price in the future, if I'm not mistaken. So let's say the price, the stock option is, the person can purchase the stock at $2 per share in the future. So the good thing about stock option is, if the market price at that time in the future is higher, let's say 5 ringgit, so the person can purchase the stock at 2 ringgit per unit. So the person can make instant profit. He used the stock option to purchase the shares at $2 per unit, and then he sell the shares in the market at $5. So he can make instant profit. But the thing is, the manager or the person or the workers has to make sure the share price of the company will increase in the future. So that is one reason a company can give stock option as a reward. It can make the person who got the stock option to increase effort to make sure the price of the share of the company increase. But the lack direct relationship between stock performance and staff contributions, lavish rewards during the bull market. This explanation is not like it is like not coherence. The point is like jump from one point to another point without the link. So these two are like the weakness of giving stock options practice in reward system. The second weakness is lack of direct relationship, and it can be a lavish reward during the bull market. The first weakness is it can dilute EPS. When you give stock option, the giving of the stock option can dilute the earning per share of a business. So that is related to finance. I think you know about that. Types of monetary compensation plan. Deferred bonus and compensation. For example, golden handshake. It is mainly aimed at tying senior executive to organization or to ensure continual efforts to sustain organization's performance. Performance shares. Point number 2, performance shares for achieving some long-term performance growth objectives or target. It is more long-term oriented but suffers weakness of accounting-based measures. Stock appreciation right and phantom stock Essentially, deferred cash bonuses dependent on future share price. Participating units. Payment is linked operating results accounting based rather than to share price. Okay, this is about agency cost. Remember about agency theory? You have learned about agency theory in the previous topic. The theory explains about the relationship between principal and agent. The context that is used in the previous topic is the principal is the owner of the shareholder of a company. The principal is the owner, the agent is the manager. So that theory has some explanation about the compensation system. So compensation system can be used by the principal to control the agent. Like I said earlier, compensation system is used by the owner of a business or the shareholder to control the manager, the CEO, then other managers, and also other workers. That is about agency theory. See second point here, problems with incentive compensation plan. This is like repetition. Stock option, you have seen that about stock option, the weakness of stock option. The second point is accounting based measure. This is problem. Or weakness. Accounting based measures. Like I said earlier, accounting data can be used to or as a basis of a rewarding system or compensation system. The simple example is the higher the profit of a business, the more reward will be given to managers or workers. Okay, that's accounting data. The problem is the accounting number, the profit, can be manipulated, and workers can use creative accounting to manipulate the profit. So that is the weakness of using that, or problem with incentive compensation plan. Okay, this is about bonus pool and allocation. One of the rewards that can be given to managers and workers is bonus. So bonus. See here about bonus. Normally, predetermined percentage of the excess of after-tax profit over the required return on investment or capital employed with perhaps a limit based on dividends paid. So most of this thing or this point explains about where is the source of the bonus. How can a business give bonus to its employee? So this is the thing. Normally it is predetermined of the percentage of excess of after-tax profit over the required rate of return. So see here, danger of use of low capital base. During boom times, the lavish bonuses may not justify the relative poor performance. I'm not sure about this point. Number 2, allocation of bonuses is normally proportionate to salary, and this gives rise to free rider problem. Allocation should be based on perceived importance of the job and the success achieved in the assigned task. If you read the textbook, then you will see there's an explanation about what are the sources of bonuses. How a business can create sources for the bonuses, There is some calculation about that, but very simple calculation based on profit, and there is a pool for everybody, for the whole business, the bonus can be come from a fund accumulated from the whole business, and also bonuses can be given from the fund in one business segment only. So if you read the textbook, you will see that. One good thing about there is something good with using sources from the whole business compared to sources from only one department. Okay, problems, models for incentives contracts. Problems of using budget or standards as benchmark for performance evaluation. Moral hazard problem as a consequence of the individual manager to intentionally misrepresent his or her specialized or private information to result in an understatement of budget or standard. Information impactedness that results in a manager not conveying truthfully the valuable and perhaps unique information about the environment due to self-interest. General conclusion. Okay, let's see here. I think this is not very clear. The title of the section is Models for Incentive Contract, but it only explain about problems. Okay, but let's see the general conclusion. A flat wage is not effective because the employee, the agent, according to agency theory, will not keep his or her promise by providing a lower level of effort than expected under the contract. Compensation package must tie rewards to performance. The logic is the higher the performance, the higher the rewards. So if such tie exists, the workers know if they make the business performing well, they will get good rewards, high rewards. That is also known as performance contingent rewards. So this kind of package is like a risk premium for risk adverse employee, and also it a truth inducing incentive for accurate private or specialist information, say for forecasting or budgeting. And also total rewards comprise a flat wage plus a profit sharing scheme based on the total corporate expected profits and the profit variance in the manager's division. Okay, this is like so can be said as a conclusion. So like the conclusion basically says, if there is a business, if the business only pay flat rate, then that is not good, because when the business only pay flat rate, the workers will become lazy. There is no motivation for the workers to work hard because they will get the same thing. The workers will see that there is no need to work hard because they will be paid the same thing, the same amount. That's why a flat wage is not effective. So the second conclusion is compensation package must tie rewards to performance. So it is not flat. When the compensation package is tied with performance, it is not flat wage. It is variable reward system or wage system. The higher the performance of the business, the better or the higher the rewards. That one is better. That is more effective compared to the flat wage compensation system. And then the notes here list 3 factors that support the idea that variable or flexible wage system is better compared to the flat wage system. Okay, thank you very much. This is the end of the lecture and also the end of the topic 10. So we have, or you have seen all topics in this course. I'm happy to say that. Like I said earlier, my aim is to cover all the syllabus first, and after this, in next week, I hope I can share sample questions, so you can refresh your memory, increase your understanding about topics. I think topic 5 or topic 6, about the topics that will appear in the final exam. So we have 2 weeks to do sample questions. I hope I can also find good questions for you. Thank you very much. That do not forget to write your name and metric number in the comment section. I will take that as your lecture attendance.